Good evening from here. Okay, close to midnight. So I want to share my thoughts on Euro USD. Today is Tuesday, 5th September, and we also look at gold because some follower commented about gold. So we are going to look at two pairs, and I am also thinking of posting it on YouTube instead of Facebook. Alright, so we go to my charts, and the first thing that I want to look at is Euro USD. So we can just go to our chart, so watch list, and we'll look at our chart. Alright, so I'm thinking of the drawings out, and we are going to do our analysis. Now, so on the month of October, I'll be talking about the euro dollar going bullish, and I say that I might be looking it to go to this high based on the long-term analysis, and I also talked about it pushing printing like a structure of higher highs and higher lows, right? So if you go to the monthly time frame, like we always do, you can notice that this is a range market, and has it traded higher, it traded into right here, create a resistance level on the month of November, we traded to right here, and it formed a resistance right here, right? So we have taken area of support, haunted area of support right here. We are inside a range, all right, not a structure. So this candlestick formed on the month of October. I was talking about going bullish, and we actually did go bullish on November, and I was heading to go to this high. But then after it created a resistance, it traded lower, having a reaction right there, and the month of December opened. Now the month of December opened, and it refused to go. It opened and did not go higher, right? So since it refused to not go higher, then what I'm trying to do now is to normally we go down to our lower time frames to see a structural shift, and that structural shift is a violation of a demand that could possibly be responsible to continue pushing the price higher, right? So if that demands get violated, then I'm looking for sales down to previous month low, right? So now I can now run down to the weekly time frame, and this is my weekly time frame, right? So let's go back to the monthly time frame. Now the monthly time frame, this red horizontal line is the previous month highs and lows. So we are dealing inside that range high and that range low on the monthly candlestick, right? So if you run down to the weekly time frame, you can actually see this high right here, and you can actually see the low right here of that previous month highs and lows, right? So now, what is the expectation? What is the expectation when you are dealing inside a range? All right. So remember, I talked about after a new high, after a high is printed, a swing high is printed. What is expected is for it to print a swing low. Right now, printing a swing low is for it to either trade lower to take out this previous swing low, or it will fail to take that previous swing low, then shift its direction to go bullish, right? Just like we have right here, we have the swing high, we have the swing low, right? So we're having a swing high right here, but not paying attention to this right here, right? I'm paying attention to the current market that we're having right here. Now another thing is that if you look at the previous side right here, you can actually see that when the market was trading lower, it was filling in areas of imbalances, right? You can actually see it filling those areas of sell side imbalance, and then we now traded higher. So what I'm trying to think right here is that since this area of sell side has been balanced and price is trading higher, I am still expecting it to go to this high, because I can see that when it is trading higher, it is printing inefficiency of the buy side. So what I'm expecting is for the price to trade lower to balance the buy side inefficiency with sell side, so that buy side and sell side will be equal, creating an equilibrium between demand and supply. Okay, so now what am I looking at? I'm trying to look for the demand that could possibly push the price higher, and if it fails, then I might be looking for a lower pricing, and that is to look for the supply responsible to violate that demand. And the demand in which the algorithm led behind is right here, right? Now, this week right here, you can see that the candlestick range right here. So after taking previous week high, it started trading lower, and as it's trading lower, what it's trying to do is trying to fill up this buy side inefficiency, because a demand was created right here, and the increase in demand leads to the increase of price, thereby creating inefficiency. So the price has to trade lower with sell orders to balance that buy side, right? And then trade into the demand that was pumped into the market, the sell that was pumped into the market, to be responsible to induce a buy order, right? And that is the demand right here. So for a supply and demand trader, it'd be like a rally-based rally, right? Rally-based rally demand zone, and that is the demand that I'll be looking at to see it continue trading higher. And the interesting part is that we are getting close to the end of the week. We are on Tuesday, and we have Thursday. We just entered Wednesday, so we have Thursday and Friday, right? So the expectation in which I'm having is that the reason why the algorithm is doing this way is for it to trade into this demand zone. All right, so on the Wednesday, it is trading inside this demand zone, and you always know that whenever there is a high impact news like the NFP and CPI, the market will range, and that ranging is it building up liquidity that it will have to take during that high impact news. So now see this way, what I'm trying to see, or the idea I have right here now, is that it will trade inside this demand zone and then range right there, trying to accumulate orders. All right, so it could trade right here and starts to range. So it is now trying to induce some traders into the market, right? And trying to induce the traders into the market, it is building up liquidity against Friday. So Thursday, we probably failed to go lower, and then doing the high impact news on Friday, we will not get to see it higher. So that is what I want to expect to see Friday. And normally, you guys know that I don't trade fundamentals. I don't trade CPI and NFP. It's some days that I traded it gave me emotional damage, all right, because of the volatility that happens during the news impact, all right. And there was also another time I tried to trade it, and I tried to open orders, but it refused to open. Like, all right, my broker refused to execute my orders, and then the spread increased also. So that is reasons why I don't trade impact news. But I'll try. No, I don't think I'll ever try to. All right. So now my attention is looking at this our weekly demand zone. Now, if you run down to the daily time frame, this is our daily refined. Now, this is the daily order block, and that is what I will be looking at. All right. So if price is to trade into the inefficiency, it could possibly watch out to see a confirmation entry right there on that demand zone, and we continue going higher. Now, the reasons also in confluence is that we have seen some certain areas of supply being violated, right? And when a violation occurs, we are looking for the opposite side of the area that caused that violation. So if supply is violated, we're looking for a demand that was responsible to overtake supply. So the same thing has order block. When the bearish order block is violated, I'll look for the bullish order block responsible to violate that bearish order block, right? So, and due to the idea the price is trading from an area of resistance, remember we marked an area of resistance on our monthly time frame, which is still right here. All right, so that is our area of resistance. So what do you think? What I'm thinking right here is that we are now having bunch of liquidity pool resting on this high, partial liquidity pool, and that is pending by others, right? So what do you think the algorithm has to do? What I'm thinking the algorithm has to do is that it's trading lower into inefficiency to balance inefficiency, and some traders are still in this trade, swinging the trade nicely on area resistance, and seeing that has an areas where we're having bunch of liquidity pool. So then the impact news, it will be drawn to take that liquidity pool. All right, so using this area of demand. So that is just the area I'm looking at, and this is my breaker structure right here, and the violation of supply, trade into liquidity, and seeing it retracing backwards, filling up buy side inefficiency, and we see what happens on this area of demand. If there's a confirmation entry, then I'm still going higher and be drawn to this liquidity pool. So what will happen that I would like to see is after taking the liquidity pool, it could like trade lower, use it as a resistance, supports, and then yeah, target this high, and that is just what I see on EURUSD. Still not seeing a bearish trend, though you can take a bearish. You can also, for day trading, you can see some sales right here based on what I explained on the weekly candle hunt on previous week high, and they started trading lower, and the confirmation was that it violated this demand zone right here, right? So the violation, and it started trading lower. You can now be on your lower time frame looking for day trades that you can do. All right, so you can actually see right here this first demand from the lower time frame was violated. Price traded backwards to it, use it as a resistance, trade lower, and then as it is trading lower, what I'm paying attention now is seeing how it is trading in a choppy way. Let me go back to the 1 hour time frame. So it is trading in a choppy way. You can see right here on a trade line. I think the market knows what it's doing, building up liquidity, and why building that liquidity? It is trading into that demand zone. So what do you think will happen on NFP? Yeah, that's a question. What do you think will happen on NFP? Now, I'm the type of person that when I'm analyzing, I'm trying to reason, right, and ask questions. Why is it doing something like this? There's a reason why the price is printing whatever it is printing. There's a reason why we always have to see why the algorithm prints liquidity. All right, printing liquidity for it to come back and take that layer on. So why is the algorithm printing such liquidity close to high impact news, which is NFP and CPI? That is the two major impact news that I know. I don't know of others. So that's a big question, and it is doing that inside a buy side inefficiency, filling up imbalance. So we are Wednesday, maybe Thursday, we trade into it, my range for a while, and Friday I might think it will go higher, take that liquidity pool resting right here, those traders that are induced right here without noticing it, and then still go back to the resistance. So that is it for EURUSD. So we can now go to gold. Now we have gold right here, and I'll share my analysis again. We take this off right here, and we go to our monthly time frame. Now if you pay attention to gold on the monthly time frame, you can see that it's been bullish for a long time, and we range right here for a while. I think this is a reaccumulation phase, because if you see right here, it's accumulated right here on a very discount price, right? On a very discount price. So a Y curve accumulation from here. Most of the ICT traders, we call it the market maker buy model. All right, so it's the same thing. Accumulation phase, the market maker, the algorithm trying to accumulate orders, and then push higher. So right here it did a distribution phase, trade lower, and accumulated right here to continue the overall strong bullish market right here. So we trade higher, and I think what it did here also was a reaccumulation of price right here, and the accumulation of price is when it traded lower to take areas of sell side liquidity pool and continue the bullish structure. So that is it for accumulation, and I don't know if I'll call this a reaccumulation. I don't know how I could. It's hard sometimes to do the markups. So now focusing on the monthly time frame and my candles, I can see right here that we have hunted this high right here, and that was 1 2 3 4 5 6. All right, that is a 6-month high that it hunted. Okay, so hunting the 6-month high, and also hunting its previous month high. So marking that out right here, and I mark this out here also. And now I can quickly run down to the weekly time frame to look for some certain range highs and lows. So okay, so the previous month high, I'll put it right here. Now if you look very closely on the weekly time frame, you can see that the chart is very clean and the structure is very perfect, right? So you can see that it traded into a demand zone right here, almost printed liquidity right here, because yeah, it went deeper. But then the interesting part was that it traded higher, and if you pay attention, this was an area of liquidity, an area of sell liquidity pool, support level. So it violated an area of supply that was supposed to continue the bearish market, because you can see you have this low high, lower low, lower high, lower low, lower high, lower low. So the supply that was supposed to continue pushing this price lower got violated, and price retraced backwards to it and use it as an area of support, and we can refer to that as a breaker block. Okay, now as it traded higher, we have a range high right here, and we have a range low right here. This is a range in which we are dealing at. All right, so for us to confirm that a range low is printed, we are going to see that on the lower time frame, and the reason I like to look at that is the 4-hour 3 to 1. All right, so if a higher time frame we have a swing high and a swing low is formed, that is where it has to do an accumulation phase. All right, so on the lower time frame you can see a supply violate and price will trade into the demand zone, and then we now see it go higher. That is the accumulation right there for a swing low, and it now trades higher to take out liquidity from a range high in order for it to print a new range high. So the expectation, the same thing you could possibly see, it could do some distribution phase and then trade lower. Now why trading lower is either is for it to create a new range low. So it's either it takes that previous range low, or it fails to take it out and then print another accumulation and then trade higher. That is how we mark our higher high and higher low, range high and range low. Yeah, so I hope you understand this right here. So on the lower time frame, we will get to see it, possibly price trading lower, and the structure was formed, and it starts trading higher to be drawn to this range high. Now what you should notice and pay attention is when this range high is taken out, and if price wants to continue going higher, okay, it will trade back to that other block that was responsible to hunt this high. It was responsible to create an impulsive move to take this high. It might trade into that other block responsible for it and then continue going higher. Otherwise, it will give us a failed high, break the demand zone, and retrace backwards to the supply zone, and then trade lower to create a new range low. Now looking on the weekly time frame, still seeing a bullish bias on gold, and I saw a clean demand zone. This is a clean demand zone, a very clean big body order block. So that is my attention right there. Now I can quickly run down to the daily time frame, and this is the daily time frame. Now on the daily time frame, for most of us that are marking some structures that I won't not refer as a structure, you will say you have a break of structure right here. And the next thing you might be looking at is this area of supply. So expecting price to sell from there, in which price did the relative reaction from there, and then it traded higher to violate it, right? So running down to the 4-hour time frame, Now, if you pay attention to what I explained previously on the swing high and the swing low, you can see that when a swing high was formed, right? When a swing high was wanting to be formed, you can see that the demand that was responsible to take this high, all right, was violated. That demand was violated right here, right? So since that demand was violated, we trade backwards into the supply that was responsible for that. Then you trade lower and then start printing structure. After taking this range low, you can see we have this low high, lower low, lower high trades into this bearish order block right here, right? And then another bearish order block was formed. So we'll be like, we still want to sell, but then it got violated, right? So once that is violated, we can now say, all right, we have a swing high, a swing low formed on our higher time frame. All right, so it got violated, price trades into inefficiency, and then it starts to print a structure, right? It starts to print a structure. So it trade backwards, gave us trade into a demand, continued that way, and then finally pushed higher to take out this range high to give us a new range high right here, right? So now what I'm trying to mark out right here is this demand zone, this bullish order block that was responsible to take this range high. So I'm seeing trying to see what if price will trade into it, form a structure on the lower time frame to go bullish, and yeah, take it that high. So price is coming close to it, right? So we are on a Wednesday, Thursday we trade into it, and Friday NFP can do what it wants to do. All right, so right here you can see that this demand was violated, right? This demand was violated, price trades into it and still left behind sell side inefficiency, right? So price is now trading lower sluggishly and into that demand that I marked out on the 4-hour time frame. All right, so now some traders are now in a sell trade. All right, some traders are now in a sell trade. Now imagine you are still on a sell and it is NFP time. What do you think will happen? So on the daily time frame, this is the demand zone. So what do you think will happen when you are on a trade and it is NFP? I heard some people say that NFP goes opposite of what people are trading, right? So that means like if you're trading a sell, the NFP will go in the opposite direction to take your stop. All right, so yeah, that is what I'm looking at on gold and euro USD. All right, so still seeing a bullish market, and that daily time frame is this right here, right? A tiny fair value gap, but on the weekly time frame we have this bigger area, which is this big, what's it called, order block right there. So yeah guys, you can share your thoughts on what you think on the comments section. I am still seeing a bullish market. Oh, I forgot to explain something. So right here you can see that we have a supply zone. All right, we have a supply zone that was violated. So like the supply violated the demand right here, right? And price trade lower and then reverse backwards into the supply zone. That was why it had a reaction right there, right? So the reaction led to a sell, a little bit of sell, but it did not sell for long. All right, and then it got violated. So this is the violation, and we label that high as a break of structure, because we have violated, is still on a bullish market, violating that supply zone in which price reacted from. All right, so that supply zone is violated. Now, what is responsible for that violation of supply? The only place in which I have inefficiency is right here. Other areas has been filled up, right? It's right here. So also the supply was violated right here. So now, due to what I marked from the weekly time frame, it is all of this sell candle, right? So possibly price could take below this and could go right here, all right, which is I think is the opening price of the weekly. Okay, it's not the opening price of the weekly time frame, but I think that is like the 50, close to the 50% of this big body candle. Yeah, it's 50%. So yeah, we just see the market trade into it, and we will look for a confirmation entry on the lower time frame. You don't just put limits, all right? You just don't put limits. So this is it right here on the 4-hour time frame. Okay, so because that demand is responsible to violate the supply in which it reacted from. Okay, so that is my thoughts on gold and also on Euro USD. So Wednesday, you know how you can day trade on Wednesday. I normally trade the New York session, and this is Euro USD. So Wednesday, Thursday, Friday for the big day. Okay, so that is it, guys. So I'm done. So I have this liquidity pool right here also. Okay, so I'm done for analyzing. It might be violated and it will break up. That is a nice one. So yeah, I think I'm done with the analysis. So we're expecting you to share your thoughts. So see you guys next time.